What's up, everybody? Welcome back to the channel. Today we're diving into one of the most reliable ways to build passive income dividend stocks for 2025. These companies have a long history of not just paying but increasing dividends year after year. Quick disclaimer, I'm not a financial advisor. Do your own research before investing. We'll break down 7 companies, their financials, and why they deserve a spot on your watch list. Let's jump right in. First up, Johnson & Johnson, one of the most iconic and trusted names in the healthcare industry, with a legacy that stretches back well over a century. This company is an absolute titan in healthcare, touching millions of lives every day through its innovative products and solutions. From hospitals to homes, J&J's impact is everywhere. J&J is a proud dividend king, boasting an incredible track record of more than 60 consecutive years of dividend increases, a feat that only a handful of companies in the world can claim. Their diversified business spans consumer health, pharmaceuticals, and medtech, which helps create stable revenue streams and robust cash flow, even during uncertain times. This diversity is a key reason for their resilience and long-term success. J&J's healthy payout ratio means that not only are their dividends safe, but there's also plenty of room for future growth. Investors can feel confident that their income is protected and likely to rise over time. With a rock-solid balance sheet and one of the highest credit ratings in the industry, Johnson & Johnson is built to weather economic storms and market downturns, providing peace of mind for shareholders. The recent spin-off of their consumer health division, now known as Kenvue, allows J&J to sharpen its focus on higher-margin pharmaceutical and medtech segments, positioning the company for even stronger growth in the future. For investors seeking stability, growth, and reliable income, J&J stands out as a foundational stock, an essential building block for any long-term dividend portfolio. Next up, we have Procter & Gamble, one of the most iconic dividend kings in the world of investing, and a company that's been rewarding shareholders for generations. If you look around your home, chances are you'll spot at least a few PG products, whether it's in your bathroom, kitchen, or laundry room. Their brands are woven into the fabric of daily life for millions of families. Household names like Tide, Pampers, and Gillette aren't just popular, they're essentials that people buy again and again, no matter what the economy is doing. This makes Procter & Gamble incredibly resilient, even during tough times. The company's track record is nothing short of remarkable. For over 65 consecutive years, Procter & Gamble has increased its dividend, proving its commitment to shareholders and its ability to thrive through every economic cycle. With a presence in more than 180 countries, PG's global reach is massive. Its dominant brands and worldwide distribution create a powerful moat, ensuring steady cash flow and long-term stability. What really sets Procter & Gamble apart is its relentless focus on innovation. Their investment in research and development means they're always improving products and staying ahead of competitors, keeping their brands fresh and relevant. While PG's dividend yield might not be the highest on the market, its reputation for safety and consistent dividend growth is second to none. Investors can count on both stability and gradual income growth. For anyone seeking a reliable source of income and a foundation of stability in their portfolio, Procter & Gamble is a must-have blue-chip stock that stands the test of time. In the world of investing, slow and steady truly wins the race, and Procter & Gamble is the perfect example of that philosophy in action. Third, Coca-Cola, one of the world's most recognized brands. Over 60 years of dividend increases and a massive portfolio of 200-plus brands. Their asset-light model, selling concentrate to bottlers, means high margins and steady cash flow. KO adapts to trends with healthier options and new beverages. Their global distribution and marketing power keep them relevant. Expect a reliable, growing dividend, not explosive growth but steady income. Coca-Cola is a classic defensive stock for any income portfolio. You can't mention Coke without PepsiCo, arguably even more diversified. PepsiCo's strength is its dual-engine beverages and snacks like Lay's, Doritos, and Quaker Oats. This diversification creates resilient revenue and high profit margins. Over 50 years of dividend growth and a proven record of smart management. They constantly innovate with new products and healthier options. PepsiCo offers stability, growth, and a safe, consistent dividend. It's a smart pick for a balanced dividend portfolio. Income, stability, and growth, all in one. Switching gears, Realty Income, the monthly dividend company. As a REIT, it owns thousands of commercial properties and pays dividends monthly. Their triple net lease model means tenants cover taxes, insurance, and maintenance, making income predictable. Tenants include recession-resistant names like Walgreens and Dollar General, over 25 years of dividend growth and 640-plus consecutive monthly payments. Massive diversification across industries and geographies reduces risk. Realty Income is perfect for those seeking steady monthly passive income. A must-consider for income-focused investors. Sixth, McDonald's, a global icon and a master of real estate and franchising. Much of its revenue comes from leasing properties to franchisees, creating stable, high-margin income. Over 45 years of consecutive dividend growth, thriving in all economic climates. Its global scale and constant innovation keep the brand strong and relevant. McDonald's is resilient with a safe, growing dividend. The golden arches symbolize reliable passive income for investors. A true buy-and-hold blue chip. Last, we have Verizon, known for its high dividend yield, making it a favorite among income-focused investors. As a telecom giant, Verizon provides essential services that generate stable, recurring revenue streams. This stability is a key reason why many investors consider it a reliable choice. The telecom industry's high barriers to entry create an oligopoly, which supports steady profits for established players like Verizon. This competitive advantage ensures that Verizon remains a dominant force in the market. While Verizon's dividend growth is slow, the starting yield is impressively strong, providing a solid income stream for investors. Verizon's heavy investment in network quality, particularly its expansive 5G network, attracts loyal, high-value customers who rely on its services for their daily connectivity needs. Although Verizon carries a significant amount of debt, management is focused on paying it down, which should reassure investors concerned about financial stability. If you're looking for high current income and can accept slower growth, Verizon fits the bill perfectly. Its reliable dividend payments make it an attractive option for income-seeking investors. Essentially, Verizon acts like a utility stock, providing steady cash flow and dependable returns, making it a cornerstone in many conservative investment portfolios. There you have it, 7 top dividend stocks for 2025. Remember, dividend investing is a long-term game for building reliable, growing income. What are your favorite dividend stocks? Drop them in the comments. If you found value here, hit like, subscribe, and ring the bell for more investing content. Keep learning, do your own research, and invest in your financial education. See you in the next video.